Hello and welcome to this weekly Outlook video at xm.com. I'm Maria Pachortis, and joining me is Senior Investment Analyst Rafi Boyajan. We'll be taking a look at the week ahead. So Rafi, let's begin with the UK. On Thursday, we'll get the Bank of England's decision. With the UK general election out of the way now, and with Johnson securing a big win, are policymakers likely to signal a readiness to change course, or will this meeting be uneventful?
Well, policymakers might be more inclined to signal a clearer policy direction. For much of the year, the Bank of England has been signaling that interest rates could go either up or down. But now that we have that some of that Brexit clarity lifted following that big victory for Boris Johnson in the elections, which lifts at least some of the uncertainty for the next year or so for the UK economy, the Bank of England might say that that's going to be positive on growth, that they won't need to cut interest rates. But recent data has been much weaker than expected in the UK since the second quarter, and there's going to be plenty of other data coming out of the UK next week as well, which should give us an even better idea of how well the UK economy is doing. We're going to have job numbers, inflation and retail sales figures all being released over the coming days, and of course those all-important flash PMIs for December on Monday, which should tell us how the UK economy is likely to end the year. So any unexpected weakness there would keep the door wide open for a possible rate cut by the Bank of England next year, and that could perhaps knock the pound a little bit given its surge following that election. But Bank of England will most probably continue to signal a neutral stance until Boris Johnson gives us a clearer idea of what kind of a post-Brexit trade deal he wants to negotiate with the EU.
Right. Now, another central bank that will meet on Thursday is the Bank of Japan. Is it expected to make any policy changes given that recent data suggests there's a clear risk the economy may be headed toward a slowdown?
So the recent data does certainly suggest the Japanese economy could be in trouble in the fourth quarter and possibly in the first quarter of next year. Although in the third quarter, growth outperformed expectations. We did see a bigger than expected slump in household spending following that sales tax hike in October. So the data does suggest the Japanese economy could do with some more stimulus, and the Japanese government did recently announce a fiscal package. So the Bank of Japan will probably want to wait until what the impact will be of that fiscal stimulus on the economy before deciding whether or not monetary policy will also be required. So we're not expecting any change for the Bank of Japan next week, possibly in the early parts of 2020.
I see. Moving to the US now. The calendar there will be fairly busy in the coming days. What's likely to be the primary driver for the dollar? The data or trade war sentiment, given that an interim deal is very close?
So all the indications are that a trade deal is very close. We could get an announcement this week or early next week. So either way, it's definitely given a big lift to risk sentiment, and that positive sentiment will probably last till the end of the year. So the dollar will probably see very limited reaction to the incoming data next week, the highlights of which will be the flash PMIs on Monday, and then the personal income and spending numbers coming up on Friday. And also we did have the Fed meeting, of course, this past week, where they signaled they're going to be on pause at least until the end of 2020. So all of that suggests that the incoming data of the next week and possibly over the coming months will not have much of an impact on the US dollar, and especially if we get confirmation of that trade deal, then that's definitely likely to be the main driver for the markets.
And finally, is there any other data we should be looking out for?
Well, we should watch out for Eurozone flash PMIs on Monday. Now, we had the ECB policy meeting this past week. Christine Lagarde, the new president, was slightly more upbeat about the Eurozone economy, and there have been some signs that we could be seeing a recovery in the Eurozone economy. So any positive numbers there from those flash PMIs would boost the euro, which is already getting a bit of a lift from that UK election and trade deal news. And we should also watch out for Australian and New Zealand data. We've got Australian job numbers and New Zealand third quarter GDP growth figures as well. Now, both the Aussie and the Kiwi have been rallying over the past week, so any unexpected weakness there could knock both currencies.
Rafi, thanks so much for joining me, and thanks for watching at xm.com.